following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the November 18th terrific Tuesday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes, who believes we should always be pioneers of our future and never, ever be prisoners of our past. Of course, the easiest way to do that is to always remember that life happens for us, not to us. You know, we can make just that one small little shift, folks. It makes all the difference in the world. Usually it's always just these little small little things, little 2 millimeters makes all the difference in the world out there. Hope everyone had a magnificent Monday. I know I did. You should have as well. Let's make sure that you and I, that we do everything we can to have a terrific Tuesday. Talk about terrific Tuesdays. It is terrific here at TFNN. For all of you watching us on your mobile apps, you're going to notice not just a huge difference, gargantuan. Hey, we haven't used the word gargantuan in a long time. We are now totally HD. That means spread of a percent. Over in Japan, we had the Nikkei finish up 370 points. That's 2%. Nikkei's been up and down 2, 3, 4, 5% at a shot out there. Boy, talk about using stops. Of course, the Hang Seng on the other hand, that was down 1%, off 267 points. The Shanghai off about 3/4%.
Nadex presents short-term binary options, a unique way to trade without being stopped out.
There's a lot to talk about.
Short-term binary contract expiration, and your risk remains capped throughout. For daily trading opportunities, visit nadex.com.
Is doing with it being up 1%. So what the DAX is really trying to do out here, right now it's trading into its most recent swing point. November the 6th out there. November the 6th out there. 94.67 is the high of that swing pointer. 94.25. 94.25. That would close above that. That would probably well for the DAX and probably prices could get back to the 10.042 level. I suspect that we're going to see the DAX get back there, but it may not be just yet out here. Inside the DAX, it's more likely that it hits that level right around the Christmas, New Year's time frame. You know, our markets here, they still want to make another push lower. Don't know whether it's today, tomorrow, the next day. We're going to see another push lower here before we get that one big final surge that takes us into the end of the year out here. The DAX at this stage, again, not having taken out the November 6 high. As long as we're over here, let's take a quick peek at the FTSE as well. See what it is doing. That's up about 0.4% out here. Now, the FTSE is actually stronger than the DAX. If we take a look at the FTSE from a retracement standpoint and come from the, come on, work with me here. I don't know what's slowing the system down. Come on, don't do this to me. Not while we're on live HD TV. I'm trying to do is get my cursor to grab the swing point out here from what looks like, I don't know, September 19th is what I'm going to guess it is, but I hate to guess. Okay, so we're going to have to, there it is. Yeah, it is September 4th. Inside of the DAX, but you know what? It's not letting me do what I want to do. I just want to take a look at the retracement from the. Come on, one more time. Nope. We'll just say the heck with that. At this stage, looks visually looks like probably right around the 0.786 retracement level inside of the FTSE. Nothing really bearish so about this stock. It almost looks a little bit. Looks better. You know, the FTSE's been moving better than our S&P 500, which has been kind of this little squash buckle without really much in the way of movement over the course of, well, you know, you listened to the show back on October 31st on when it was Trick or Treat, and I said, hey, guess what? It's going to be a trick out here. The market's going to start moving sideways, you know, consolidating, going to frustrate both bulls and bears out there. And in essence, that's really what has taken place. Let's go take a look at let's go take a look at the currency market. Let's start off by looking at the currency market. If we then start off by taking a look at the euro, because it's got the largest impact inside of the U.S. dollar index. Now, what you're going to see out here, and I know it's going to blow most everybody's minds, and it's not what most people are calling for. You're going to see the euro make a huge change in trend here. That huge change in trend is going to go ahead and knock Humpty Dumpty, which really isn't Humpty Dumpty. It is the U.S. dollar index off of its throne out there just for a while. And it is going to be the euro that is going to be the culprit because it's 57% of the weighting structure. Now, where are we at inside the FTSE? It's just quietly making its bottom out here. And when it does get some traction out there, wait till you see what happens to Goldilocks and Hi-Ho Silver out there, because they've been moving, they've been moving and saying, I'm not waiting for you, Mrs. Euro and Mr. King Dollar out there. As gold and silver have formed a significant bottom, just like our market, just like the stock market on October 16th formed a significant bottom, so too will the euro out here. Now, we haven't gotten the type of signs inside. Well, actually, I take that back. The euro looks a lot like the gold chart. In fact, if I covered up the name, you wouldn't really be able to tell which is which out here. So what the euro's doing is basically just making some it's making higher lows out here. And it's a very subtle thing to look at and to recognize, but that in essence is what it's doing out here. If we take a look at a shorter-term time frame chart out here inside of the euro, we've got some A to B equals CD patterns that are in the process of forming. The next one is in place right now, and that's starting off. Boy, come on. I have no idea what's going on here. It's probably not going to let me do this. Boy, I can't get my cursor to work. So I'm going to have to switch over to some different. There we go. Got the A point. Well, now that I held off, there's a B point for the A to B equals C to the upside. The euro's next stop, number one, it's going to go ahead and take out the its most recent swing point. It's on its way up into about the 1.26. 3 level for a 1-to-1 A to B equals CD to the upside. So that's where that should be headed to. It's going to needs to get above this little shooting star. This is a 30-minute chart, by the way, that we're looking at. Once it gets above that level of resistance out there, then we're going to be looking at 1.263 or so inside of the euro. That'll go ahead and continue to put some real strength inside of gold. Let me switch to a different page. Maybe if I do that out here, I'll be able to get the use of my cursor back. That would be kind of nice. Okay, there we go. Looks like we've got it. Now we're taking a look at gold, looking at the December gold contract. You can see that looks similar to the Euro futures contract that we were taking a look at out here. Now the benefit or the difference here inside of gold, number one, you're above the market profile high out there. So that's a resistance. That took place on Friday. What did we see yesterday? We saw yesterday gold come back and test that level of resistance, and that's always nice when you when you break a level of resistance or support. You want to see price come back and test it. It doesn't have to test it more than but just one time out here, and that's in essence what we saw Goldilocks do yesterday. So now it's off to the races. Where is gold going to head to? Well, we take a look at gold. Take a look at the December contract. What will all of a sudden start, will all of a sudden start hitting the screens of folks and make people a believer. Yes, that wonderful song by the Monkees out there. It's going to be when you see gold break a little trend line out there. So we've got time before that actually takes place. So there's a lot of naysayers out there, but as soon as gold breaks through, just a little short-term trend line out here. That's really just using the July 10th high, and I'm using a trend line, not a channel line. We can use them both, but if I use the July 10th high, basically use the August 8th high out there, pretty decent trend line. So gold has got a ways to get up there. It's probably at about the 1230, 1240-ish type range. But when gold gets up to that level, all of a sudden, well, first of all, if you've been short, the sphincter muscle's going to get a bit tight out there, and you're going to say, I think that maybe I'm now on the wrong side of this trade out here. And I can tell you that you are on the wrong side of the trade if you are short gold out here. But when it gets to that trend line, then expect some real acceleration, because then what's going to happen, kind of like when you're out, in the water and you see, whether it's minnows or fish. A school of fish is a great example. They're all going in one direction, and all of a sudden something happens and they all change in the other direction. In essence, it's kind of like a trend line inside of the marketplace out here. So if we take a look at just simply retracements, let's see if this works. Just off of our last swing point low out here, and that's from October 21st down to the low that was put in here back on November the 7th. What gold is doing, and we'll take a look at a short term. It's made the 0.618 retracement, or very close to it. 1207 was that number so far today. I believe 1204.50 is the high out there. So in essence, that retracement level is done. Let's go take a look at a short term chart out here, see if it's completed an A to B equals CD or any kind of pattern on a short-term basis. That would suggest that we could see it pull back a bit out here. Okay. Maybe we're not going to go do that. Yeah, there we go. We can do that. Really what... I can see 1A to B equals CD for sure. If we just take a look at that price projection, we'll just start off with the lows down here back on November 7th. That's your A point. Your B point's a high on November 7th at about 5 o'clock in the afternoon. Your C point is a retracement. You can use really a couple of different levels. We can just pull back to this area right here. That's what I'm going to do, which is about the 1145 area. So we can see that what gold did, it made that 1 to 1A to B equals CD. That price projection was 1194. Now we've got the potential second A to B equals CD inside of gold. That low being at about 8:30 to 9 in the morning on November 14th. That's your A point. Your B point out here, there was not much of a retracement. So your B point is at about a price level of 1193. It says we ought to see a move up to 1241. Maybe even 1257. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. No real change in the futures market. Let's go out to Nashua, to our man Lou. Lou, thanks for calling. Thanks for holding. How you doing this morning?
Not bad. You?
Excellent. Thanks so much for asking. You want to take a look at
silver futures? I was thinking of getting March calls.
Okay. If we take a look at silver, if we take a look at the December contract right now, you're up about 15 cents, trade out at 16.20. Silver has not been as strong as gold, as you know, out there. So, what silver needs to do, maybe today's the day, Lou. It really needs to close above the 16.40 level. Which is the I'd say is the TAS market profile high out there. So I think that the metals have formed a bottom out here. And as we take a look at silver, I mean, that's what the big boys think, or that's what the big boys, that's the position that they're taking. So you're pushing yourself out to March, I think you said?
Yeah, right.
Yeah. I think if you just use just good money management, I don't see anything really wrong with that trade. I've got the commitment of traders information up on my screen here. The commercial traders started to take their foot a little bit off the pedal as far as getting to extremely low net short interest out here. In fact, the last time they were down basically at these types of levels was when there was a little bottom that was formed back in June of 2014, as well as they didn't get down as far as less net short as the little bottom that came in back here in June 30th, 2013. But I think you're in a, just use good money management.
Okay. Sounds good.
All righty. Thanks so much for calling, Lou.
Yeah. Bye-bye.
Let's go take a look at light sweet crude out here, down 61 cents. Now where the other dollar-related commodities, gold and silver specifically here, have been acting pretty well. Light sweet crude on the other end hasn't. I just caught a little bit of the end of John's show out there. But, light sweet crude out here, crude oil, I think he was saying it was the most rigged market. He might have used that word. Maybe I don't want to put words in his mouth out here. But, I, too, have not seen any kind of a bottom. I think it is the weapon of mass destruction against Putin out here. And they've got it in for Putin economically. That becomes the easy trade. When I take a look at the commitment of traders data, as I look at light sweet crude, I can't get a good feel. I can in gold and silver. But when it comes to light sweet crude, I don't get the same kind of a feel that maybe a bottom is in. Now, this liquid tea out here, Texas tea, pretty much moves in correlation to the U.S. dollar index. So many people want to tell you about how light sweet crude trades in the direction of the S&P 500. Don't believe any of that hogwash out there, because that's all that it is. I've put this chart up on the screen before. Let me see if I can find it here real quickly for you. Here it is right here. Yep, I can find it real quickly. Here's the chart. The upper portion of the chart is the S&P futures. The center portion is light sweet crude, and the bottom portion is the U.S. dollar index. And for all those out there that try to push that BS before Steve information out here, that the S&P, in essence, is trading in the direction of light sweet crude. I mean, what the heck are they smoking or drinking out here? Take a look at how you can see the S&P, which was trading a bit of a consolidation, broke out of the consolidation back in 2012. 2013. That was a shorter-term consolidation. It was just simply been off to the races. Whereas we've got the same kind of consolidation pattern inside of light sweet crude between the $111, the $79 area. Now you're down at $74, so you've broken through that consolidation. More so, if you take a look at this chart, you can see the direction of light sweet crude and its correlation to the U.S. dollar index for the most part. A much better correlation than the S&P 500. I mean, geez Louise, what the heck are those folks even thinking out there? All you got to do is just do the homework. Don't believe anything that I say. Don't believe anything that anybody says. Just simply go do the work out there and prove it to yourself. You do that, then you start to unleash the trader within, and really that's what it's truly all about, is it not? Let's go take a look at some things here that are moving in the pre-market. Well, we can only look at maybe one thing. So a lot of stuff working in the way of gold and its sectors out here. To the downside, looks like NBS, which is really Neostem Inc. That closed at 678. It's trading down at 514 out here. 514. Now, this thing had breakout just a couple of days ago. So that's pretty decent pullback, 514. I'd have to look at this a little bit further, but this thing broke out from a price point of 521 back on November the 12th out there. That's going to set up one huge island reversal. NBS is the ticker symbol. It's way too little in price to short. This is Steve Rhodes at TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Off to the races. We got the Dow up 2 points, trading out of 17,652. S&P up 1.5, trading at 2,042. Composite up 8 at 46.79. Russell 2,000 up 3.5 points, trading out at 11.67. DAX up 117. FTSE up 27. Goldilocks up $9. Silver up 12 pennies. Light sweet crude back 58 cents. Leading the charge to the upside, it is Actavis, PLC, ACT is getting in on the act, up 3%, up $7 and change. Terraform, PWR. Poor TERP is the ticker symbol, up 27% this morning. That's trading out at 32.85. Sun Edison, or it could be Sun Design if we just simply reshuffle those letters around. But it's Sun Edison, up 19%. Maybe they've got something going on with Terraform Power out there. I'll have to check on that. That's up 19%. GoPro up $3 out here. I think they're floating more paper, and this thing is pushing higher price. You got to love that. Energy Transfer Equity up 4%, up $2.50. Tesla's up $1.80. Tesoro Corp is up $1.27. Virgin America up $1.71. Fluor Corp, FLR, up 2%, up $1.33. To the downside, Omega Protein, Yeeks down 16%, up $2.44. Urban Outfitters off 6%, down $1.93. LinkedIn off $1. You've got NeoStem down $1.70. That's off 25%. That's one that NBS, that's what we were taking a look at earlier, trading out at 502. TJX Company's off 2.5%, down $1.50. Home Depot, I think Home Depot might have been out with their numbers. HD is a ticker symbol, down $1.26. If they were out with numbers, I don't see it out here, so that's not good. I'm going to continue. I want to stop the script. Yeah, let me see what happens. Don't like that. Okay, there we go. So Home Depot was out with numbers out there. Okay, that's good. So Home Depot, looks like their numbers, what do they generate out here? What pops up on my screen? Looks like earnings of $1.5 billion versus $1.4 billion from last year. Now we're telecasting in all HD as we speak right now. So you ought to be, if you're watching this on Tiger TV, you ought to be able, this will be pretty interesting, you ought to be able to actually pick out the text, which you've never been able to do watching us on Tiger TV. Inside the den, yes, but inside of Tiger TV, no. Let's go see what Home Depot is actually doing out here from a stock standpoint. Where's this doing? It's trading a bit lower out here. Let's go ahead and pull the stock chart back. Let me go ahead and turn a couple of tools off just for the moment. Let's turn up the boxes, and let's turn off the moving averages out here just for a moment. So we got a kind of a little bit cleaner chart here for Home Depot. Let's get a feel for where this could possibly pull back to. Now, Home Depot had just one heck of a nice break, a wide price spread, accelerated volume. It did that back here in the trading session of August the 19th. Now, the volume on that session, come on, grab the bottom of that candle. Why don't we do that one more time out here? Seem to be having just a slight problem with, there we go, that's better. 86.57 is the number. Now, the volume on that breakout session, August the 19th, that gap up, that's a strong gap. That's an important gap, 18.2 million shares. When price pulled back there, was only 13 million shares. So as the markets were really, moving to the downside, remember October 15th, October 16th, everybody thought that the world was coming to an end. Stevie was saying, no, the market's going to be making a significant bottom out here. Well, Home Depot was pulling really back to a breakout area on lighter volume. Then you had a nice little bullish engulfing candle that formed on October the 16th. And it's been off to the races. Now we've got a slight pullback. You've got a little swing point, little junior swing point area from the trading session of November 4th and the 5th. About 5 million shares back there. You've already done 1.4 million shares. You're testing that area. Probably says at least the low of that will be tested. Now, the ultimate buy inside of Home Depot, I don't think we'll have it, but the ultimate would be coming back to that 86.57 level out there. If that area does not hold that support, then August 18th's high, 84.62, should. So if you were going to get it, if you were to receive a gift like that, you'd have to have your stop below the 84.62 level. And that's on Home Depot. Gaps are your friends out there. Again, gaps are nothing more than wide-ranging bars. You just got to paint in the difference. You got to paint in that gap in order to be able to truly visually see it out here. That's what's going on inside of Home Depot. If we take a look at the weekly time frame for Home Depot, let's go do that. Let's go see what we've got out here. In the case of Home Depot, back here as it was making last week's move higher, 19 million shares after 25, after 28. So volume just kind of dissipating a bit, but this thing has got really tremendous support at that $86-ish level out here. Ticker symbol HD. Let's go take a look at Omega Protein, OME versus OMG, oh my God. But probably if you're a holder of it, you are saying, oh my God, this morning down 16% out here. Let's go take a look at its daily chart, get a feel for what it is doing out here. So gapping down this morning as we pull this back. This thing has a high volume low that it's testing out here. It has not gotten all the way down there, but this had a tough trading session, tough sledding on August the 7th out here. August the 7th. This equity went from, it opened up at 14.75, it closed at 11.95. That's quite a change in one day out here. Well, you're seeing that kind of change here today, only instead of it being a wide-ranging bar, today you're seeing it being a gap down. There's your wide-ranging bar, right? If you just go from yesterday's close, which was at a price level of $14.98. You're trading at $12.34 as we speak right now. Now, volume, 250,000 shares. That high volume-ish area, low out here is 895,000 shares. So it ought to at least get back there. Now, this is, let me pull this back a little further to the left out here and check out. This thing has got the OMG, Omega Protein. Boy, this thing has got a number of gaps out here. The real support level inside of Omega Protein comes right back to where it really originally broke out. And that price point, that price level is at $9.68. It broke out. That's where the real breakout inside this equity began in the little haywire pattern that we've got out here of gaps. That was on the trading session of November 7th, 1.1 million shares out there. Price came back and tested that beautiful thing with only 156,000 shares. That was back on February the 3rd. And then price targeted the top of that swing point as it should. That swing point, that November 25th level out there, that's right around 1527. So that's really your consolidation high out here inside of Omega Protein. And it would say that if Omega Protein, OME, could pull back to the 968, and it can do it with light volume, that would be a pretty nice trading range. You'd be going from about $10 to $15 out there. So maybe you want to keep an eye on Omega Protein, OME. Let's take a look at some things here that are popping to the upside. Dow's up 23, S&P is up 4. Let's take a look at this TERP out here. Let me see what the news is behind TERP. Okay, yeah. So Sun Edison and Terraform, Sun Edison, Terraform to acquire. So that's what's going on with Terraform Power out here, and that's the premium, $22 out there. So we won't spend any time on that. Instead, let's move over and take a look at Valiant Pharmaceuticals. That's up about $4.60. We've got the daily chart up on our screen out here. This looks pretty good. Let me see what this is pulling. Oops, come on. Give me a shout out here. Okay, let's go see what this is trying to trade up into. Okay, so this had a pretty decent sign of strength that it looks like it completed an A to B equals CD to the downside back here on August the 7th. That's now your A point of an A to B equals CD to the upside. Let's go take a look at the potential A to B equals CD that may have confirmed inside of Valiant Pharmaceuticals. Your A point down here looks like right around the trading session of August the 11th. Use as my B point up here on October 2nd, and our C point, our retracement down to October 15th, October 16th. So trading a little bit with the market. Nonetheless, the B point had volume of 3.9 million shares, and it was taken out with 2.9, 2.6, 2.1, 8 point. There we go. So it's really that B point was taken out yesterday with the accelerated volume, 8.8 million shares. You are now likely headed to the 1 to 1.618. A to B equals CD to the upside. That's 154.53. Well, the reality is you've got your 52-week high, maybe all-time high swing. That's from February 27th. That price point is 153.10. So Valiant Pharmaceuticals, VRX is the ticker symbol. She's headed to 153.10 to 154.53. Traded out right now at the 141 and change mark out there. A nice move inside of that equity. If we take a look at Amazon. Let's go take a look at Amazon. In the case of Amazon, it's up another $4 this morning. Of course, that formed that nice low back on that day. Went from a volume standpoint. Here's where maybe volume wasn't stronger than the actual longer-term trend inside of Amazon. What do I mean by that? Well, inside Amazon, it pulled all. I don't know if this is up here. It's not up here. I got to draw it back in. All that Amazon did when it pulled back most recently was pulled back into its long-term trend line out here. That trend line looks it did it in such a beautiful chart pattern. What's cool about this is that when we looked at it, that means you and I, when we looked at this, price was nowhere. Whoops, come on, just stop right there. Price was nowhere near the bottom. That's so weird. Come on. What are you doing here? Just wanted to move it back. I'm going to miss the bottom. There we go. I'm going to miss the top of the trend. But when you and I were looking at it, what we noticed was that price, and at the stage that we did it, price was nowhere near the bottom of that trend. And that is a strong trend. And then this is a monthly chart. Now, the monthly chart, you're getting a bullish reversal signal as well. So you got a nice big bullish engulfing candle. So Amazon has seen its lows out here. And it's going to at least travel up to the midpoint of the channel line in the 360-ish type range, or 327 as we speak right. As we speak right now. Let's go back and take a look at the daily chart out here. Let's get a feel for the daily chart, what it is doing. So it's closed the window out here of that big gap down. That says that's no longer an area of supply. We don't have to worry about that inside of Amazon. Its next level of supply happens to be right up here at the swing point from September the 4th. Now, that high is at 350. Not too far away from the 360 level, I think, on that midpoint of that channel line out there, right? So that's really the next target. Now, that swing inside Amazon's got 3.9 million shares, and a couple days ago, you moved higher with 8 million shares. So Amazon's moving higher. Yesterday, 4.7 million shares. Today, already 441. So Amazon ought to be able to get up and at least tag that area. At that level, maybe is where we start to see things consolidated. But if it can get above the 349.38 level, do that with more than 3.9 million shares, she'll go repair the window. That's the break from that gap down on July 24th out there. That is ticker symbol AMZN. That's what's going on inside of Amazon. Let me see. If we go and take a look at the euro Japanese yen, if I take a look at what's probably putting a little bit of oomph into the market out here this morning, it is this currency pair. It's the euro Japanese yen, and at least that is my belief. We need to keep an eye on it today. Today will help us to understand. I'll go look at the New York Stock Exchange too in just a moment, but this will give us a pretty decent indication as to whether the markets are breaking out or really we've just got some as we continue the kind of the sideways-ish type action. But if the euro Japanese yen is able to close above 145.68, you're at 145.96 as we speak right now. I got a 15-minute delay on this, so not that big of a deal. If you're able to see it close above that level, then that'll put enough fuel in the fire to keep these markets moving higher. Just simply that correlation. But we'll just have to come and take a look at this tomorrow morning after this currency pair closes, see if in fact that area acted as resistance. Let me take a quick peek here at the New York Stock Exchange, get a feel for where we're at on market breadth at this hour, 9:47 a.m. 1,330 net advance in issues, not too bad. You've got decliners or advancers outpacing decliners by nearly 3-1. So that's pretty decent market breadth inside the New York Stock Exchange. Let me take a look at the see what the VIX index is doing here. So down 29 cents. Let's go check in on the VIX. So yesterday the VIX almost got up intra-session to its 50-day exponential moving average line. Put this chart back up on the screen right here. If you're watching us on Tiger TV in full HD, which is a beautiful thing, the upper portion of my chart out here, that is the volatility index. The bottom portion is the S&P 500. And which another great use for this tool out here is just apply the 50-day exponential moving average line to the VIX. All charting packages should allow you to do that. In the case right now, that 50-day exponential moving average is priced out at $15.10. Yesterday, it was right around $15.16. The high yesterday was $14.73. So price did get all the way up there, but pretty darn close. If we see price get above that level, that is going to be a real good indication that we'll start to see some pretty decent carnage in the marketplace out here. What the VIX is doing at this stage is it's starting to make these higher lows, kind of like we took a look at in the euro, and we took a look at gold this morning out here. Well, the VIX is although subtle, has that same kind of pattern in place. And it's never a good scene to see that pattern at the same time seeing the S&P do what it's doing, which is gradually moving higher. You just take a look at those small-bodied candles out here. It's always a message of a market that is tired. But that's the bottom of the screen. Last time we saw that, quite frankly, it was all the way back here in August. So August 26th, we saw those small-bodied candles finally made the high September 19th. Market's just simply still tired out here, even though we're seeing a little bit of a nice open here. This is Steve Rhodes and TFNN. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd, when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses when placing trades. You'll then receive 6 weekly updates each Monday morning discussing the possible alerts currently setting up in the market. Steve will then bring everyone back together for a final 3-hour live workshop Friday, January 9th, where he'll discuss the methodology that went into each of the 6 weekly updates, making sure that you're confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 off that price. For all the details, visit the front page of TFNN.com right now.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow's up 33, S&P up 6, Composite up 23, Russell's up about 10 points as we speak right now. If you didn't catch the commercial, I am putting together a workshop. Begins this coming Saturday. And, we each of us have 6 core human needs. And we've got the need for significance, the need for certainty. When it comes to trading and investing, if you want to meet your need for certainty, which you should, you just have to use stops out there. And we all have the need for uncertainty. Can you imagine if we just showed up each day and the stock market was only doing one thing? It would get kind of boring out there. So you need to have that variety out there. It's another way. Love and connection. We all are striving for love and connection. We're just utilizing different tools in order to meet that. And then finally, the 2 more spiritual needs that each of us have, the need for growth, the need for contribution. Well, I can tell you, if time is important to you, then the workshop, the 7-week trading course that kicks off on Saturday is a place that you want to be. So when it comes to your technical analysis, you can spend a lot of time reading books. You can spend a lot of time doing trial and error out there. But if you really want, in a short period of time, because it's 2 3-hour workshops. So the first workshop this Saturday, it'll be archived if you can't be there because you have other functions. We totally get that, understand it. It'll be archived. It'll be on your members page come Monday afternoon. I'm going to be with you for between then and through January 9th in a kind of an intimate setting because my outcome, see, where the 2 core human needs that I meet each and every day are for growth and contribution. That's why I do this show. I don't do this out of significance. I think it comes across that way. The only significance I get is by significantly giving more and contributing more. So this workshop it's a one-of-a-kind workshop. Cost on is $395. That you will save so much money by attending this type of workshop. If time is important to you, if time is not important to you, then then I'm not sure what really where to go with that. But if time is important to you, we're going to get right down to it, the best patterns that are out there. So again, all the details on the homepage at TFNN.com. I hope to be able to see you there. I only get to do this, or only really do this maybe once a year out here. And each workshop that I do, each one is better than the next. That's part of growing and contributing and learning out there. So I do hope to see you. Okay, let's go back to the markets out here. Dow's up 34, S&P is up 7 points, Composite's up 25. Composite composite is the one indice that we really want to keep our eyes on today. Yesterday, the composite slipped to a change in trend indication out here. It needs some additional follow through today. We're not seeing that. What do I mean by that? If you watch us on TigerTV on this full HD, I mean, that's a beautiful thing. The top portion of my chart is the NASDAQ composite. The center-ish, low center-ish, the second panel in my chart here, that happens to be the summation index, McClellan summation index for the composite. The bottom happens to be the price oscillator, which yesterday dipped below the zero line out there, indicating a potential change in trend out here. You see it kind of just switched to this little red. You can actually see it inside of TigerTV. How cool is that? Now, it could have just been a one-hit wonder. I don't think so. We still have really declining tops inside of this oscillator out here. So at this stage, I still am looking for a short-term retracement. I sometimes use the word correction, and that, correction, sometimes people think on a correction, they're thinking big, huge move like we saw back down in October. That was more than a retracement. That was a decent correction out there, and that's not what I expect to see this time around. But nonetheless, we want to keep an eye on the composite out here because it's in essence just slightly dip below, and then it's been touch and go, a little trampoline effect out here. We'll take a look at volumes inside of the ETF structures during the second hour of the Trader's Edge. So if you're off to start your day, folks, have a terrific Tuesday. Thanks so much for joining us. Don't forget, go over to the homepage at TFNN.com. Sign up for my 7-week master, it's a 7-week trader course, but I will teach you how to be a master. We'll be, see you in a few. Take care.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.